Hello everyone. In this video, I'm going to talk about TDIX and share some things that I've learned with it, some patterns that I've noticed, and how you can use these things to your advantage when you're doing your trade entries and exits. It can also be used as another confirmation like confluence or kind of like an invalidation as well. And although I talk about the TDIX money flow and divergences a lot, this isn't a video about divergences. This is about really this RSI scale and the 50 line in particular and the Bollinger Bands and generally how things move from oversold to overbought and back down again. So this can help you, and I'm going to just kind of zoom in on TDIX and go over some basics for people who might not really think about this. So you know that TDIX is going to go from oversold regions. You got your money flow, your FastMA, your slow-MA, everything down here, your Bollinger Bands. Even your Bollinger Bands are below the 50 line on this scale over here when you look at TDIX. And so this is showing that it's really oversold, and you're more likely to have a move up after that. And the same here with your overbought region. And really just anything above 50 is generally bullish, and anything below 50 is generally bearish. But what you have here is the movement, the wave. If you go below, you're eventually going to come up from that and go back towards the top side. And when you're at the top side, it's going to start getting divergences or whatever, and it's going to reverse, and it's going to come back down gradually down here. And you have your little ups and downs as it moves from top to bottom to top again. In this case, it went kind of slow and gradual, and it tapped it and came back up. But basically, you just have this continual movement up and down on your TDIX, and going from oversold to overbought. And this way, when you know the position of these Bollinger Bands, are they below the 50 line on this scale? How deep are they? Or are they above? It's going to help you to know where you're at and where things are probably going to go. And this can help you tremendously, and I'll explain why. All right, so first of all, the Bollinger Bands are very important. I don't know why my screen's glitching out a little bit here, but the Bollinger Bands are very important. And you'll notice that the middle line, this yellow line on the money flow, is the middle band of the Bollinger Bands. And it's really just kind of awesome, really great the way TDIX is designed. Because if you had a regular RSI and you turned it on, the RSI, in these choppy situations, is going to go up and down like up and down. But when you have the Bollinger Bands and the money flow that just stands out, you got a good idea of where your position is, and it's very accurate. But what I'm going to do is help you cut through all of this chop before a big move happens, and kind of explain the logic of this, of why you would know, or how you would know when it's been down for a while and it's getting ready to come up. And so I'm looking at it on a small time frame now, but it works on all time frames. And you'll see something key here is you have different times, like when the RSI is below the 50 line and the Bollinger Bands are below the 50 line, and it's just kind of going up and down. And that's not a great example, but Here's a really good example. Here we go. This is an excellent example. You have your 50 line here, the middle, and then you have your RSI going up and down, and price is kind of choppy. But what you see overall, while this keeps going up and down and it can't get above the 50, is that the money flow is kind of coming down. It's waving a little bit, but it comes down. And when you see the RSI staying below the 50, it's generally bearish, or it's more likely to be bearish. Just as over here, like the RSI is spending a lot of time on the top side above the 50, and it's gradually going up. And this can help you cut through the chop and know what gear you should look at, so to say, or what gear the price action is in. Because the fast MA, the white line, moves fast, and the slow MA, the green line, moves a little slower. But then you have, the money flow, which moves even slower. And so these gears are different, and they are all going to oscillate and go up and down. But some of them, being faster than others, are just going to have a lot of noise. They may line up with other time frames and things when you look at different time frames and say like, okay, well, you keep going up and down and getting bullish and bearish shark fins as it's under the 50, but price is still on its way down. Then you can also look at the money flow to see where is it down. It may be coming up. And then on top of that, the 200 SMA moves even slower than the money flow. So you have different gears, and I'm not really here to talk about the 200 SMA in this video either. But what I want to focus on is the amount of time and how the price reacts and moves when the RSI is above or below the 50 line on TDIX. So like in this case, let's say the price was here and you had this choppy area, and it's basically telling you here that even though there's a bullish divergence, it's wanting to go down. And you could have looked at like the 200 or something and seen that it got under it again. It couldn't get above it. You could have looked at other MAs. You could have looked at indicator X. I'm sure there's probably, so I'd have to pull it back some. But if you look back, you'll start to see other things there. Yeah, like here, it went under a value line and couldn't get above it. And there's also some sort of level here. I don't know what I marked. It looks like a key level of some sort. But it's so easy to identify it right here on TDIX. You see this choppiness, and it's just not wanting to pull back up above the 50. It's telling you that it wants to go down more. In that case, you can expect the money flow and the Bollinger Bands to kind of go down further. And even if it comes up some, it's still generally down here and spending more time down here. And you want a gradual, once it comes all the way down to as deep as it's going to go, wherever that is. In this case, this was the deeper part, and it had a divergence at that point. You start to expect these divergences when you see this, that they're on the way, because price doesn't have the strength to get above the 50 and hold. It's below it, but it's not quite ready to bounce. It's still looking for a place people are willing to buy it at a value. Actually, here it had more, and if you change the time frame, I'm sure it would be even more obvious. But you could have traded this little divergence here. Anyway, not talking about divergences in this video. That's not the topic, but you'll start to see this happen as well. So price was down here for a while, and you see it so clearly by the red money flow, mostly red money flow. You did have a little green, but as it goes up and down, then you started to get gradually up here above the 50. The RSI, the money flow, the Bollinger Bands up above, completely above the 50 and holding. And what you started to get is the patterns again, kind of like what was back here, where you see this chop right here, and it was below the 50 and it went down. And here you start to see a little bit of chop above the 50 as the money flow is catching up, and it had a dip, but it went up. And then here, like, it was really above the 50 and kind of slingshotting in the Bollinger Bands, but it was generally above the 50, so it was bullish. And that's the main takeaway of this video. Is where is this? Is the white line, the FastMA or RSI, is it above the 50? Is it holding up there? Or are you getting something like this, where you start having more movement, like it's up above, then it's below, then it's up above, then it's below. Then you're really getting stuff that's a nice area to trade. You might want to look at different time frames in that scenario as well, or different indicators and levels and things. But you can see how it's spending more time on the bottom in this case than it is above. And right before you had another drop here, you had that pattern appear again. You had this choppiness, and then it didn't get above, and then it had a bearish shark fin while in red money flow came down. It had choppiness, like as if it wanted to try to get above the 50, but it couldn't. It was very choppy here. Bollinger Bands kind of contract just a little bit. It had a little move up, but then it slingshotted right back down. So when you see this here, this choppiness on either side of the 50 line of the scale, if it's below, most likely it's going to have a little, maybe a little bounce, then a dump, or just a dump. And if it's above, right here, it's above and it's choppy, same thing, but it's on the positive side of the 50. Now, this isn't always the case. There are exceptions, like here it's below, but it ended up going above, and I'll show you why probably. Let me look at some other indicators in that situation. So you do want to check other indicators for more confluence, but how it's holding above and you know, what's happening here as it gets choppy and jagged, you're getting ready for a bigger move, like this Bollinger Band started to contract and it got very narrow right here. So you see the patterns now of where the FastMA is above or below the 50, and it's choppy rather than just crossing above and crossing below the sentiment and then just kind of going like that if it was smoother. And you'll see that easier on higher time frames. There's often less choppiness. It still occurs, but in this case, it was choppy and it was below, but you did have a general, it was down for a while, and it was kind of coming up from this deep area, how far it went down before, and it was coming up. And when you can reveal that too, when you start looking at the 200 and things, to kind of give you something a little more to gauge. Like in this case, see how like over here it was choppy and below the 50, but it went down. And here it was choppy and above the 50, it went up. But here it was choppy and below, but it went up. But the thing is, it got above the 200. And there was a bull div. So it was on its way up. And this green movement here was kind of a move up, but it's kind of slowly traveling, kind of like up, you know, and it kind of moves up and down like that until it gets to an area and it's like, okay. And by the way, in the middle line, when it's close to it for a while, it could go bullish or bearish pretty quick. But you want to look for these patterns, like this choppiness. And where is the RSI in comparison to the 50 line, and where is it on the in comparison to the 200? You can also look at your trend X. So like your trend X is going to help you. Actually, mine's not set to go back as far, but that's not my focus on this video. And here it was choppy underneath, well, kind of not super choppy underneath, but you get the feel of of how price is going to go. And now I will look at the 200 a little more. And so price is kind of, it's just going up and down. It gets above the 200 and goes below. And sometimes, like, if it's been coming down for a while, it comes down here and it taps up. It just kind of taps into it, but doesn't get fully above it. So you often have some pokes on it, like here, like it was up above, then it got below and it poked, but it didn't go down for a while. So you have these choppiness of the price around the 200 as well, before price says, okay, I've had enough, and it hits the 200 and just rejects, or hits the 200 and just bounces. So think of it as that your FastMA moves fast. Your slow MA, it's something to show the crossover. If your FastMA is above the slow, it's bullish, like right here. The white line crossed the green right here, and then you had this move up. So that's like your first gear. You get a little move off of that. And then, you kind of got like your second gear, which is, I would say, like your Bollinger Bands and your money flow. Where is it in position to the 50 line? Are you above or below the 50? Maybe third gear kind of gives you a better outlook to say, okay, it's been below the 50 for a while. It may still be on the way up. In this case, it wasn't. But there's so many different things you can do. And after that, after you look at the position of the Bollinger Bands and the money flow, then you have the 200 to kind of give you a general direction. Sometimes I will even look at the 800 SMA, and it's very helpful too. It's actually, I'll leave the other one on. And you'll see here like more of these patterns. Let me get rid of my drawings. And you see where price is kind of playing with the 200 a lot and, trying to decide. But like, you can bet it's bullish when it's above the 800, because that's what this is, the 800 SMA, the purple line. And when it's below it, it's bearish. You will have a little bit of play with it here too, but it's a little stronger. So these other moving averages are quite useful as well. And what you're, generally, what I'm trying to explain is that the oscillation, the movement of price, as it goes up and down, as it tries to find a fair value that people are willing to trade it at, and how you'll start to see a shift occurring with TDIX. So let me look at something different. There was one that pumped recently. It pumped really a lot. What was this? This one had a pump, and yeah. And so I knew it was on the 3-minute too, and I seen the patterns. They were so clear. And let me guess, my internet's gonna mess up while I'm recording this. Sometimes changing time frames. Oh, I got it here. Great. Okay, here we go. Let's see if that other one loads. So my internet can be weird. Oh, here we go. Oh, here. This is a perfect example. All right, so in this case, it was in the oversold area, but it consolidated, and then it finally started to spend more time above the 50. So you had your FastMA coming up here first. It was the first to go, the first to say, I'm going up. Your FastMA was on it. And as your FastMA started getting above, it started to pull the Bollinger Bands and money flow up. And as the price went sideways somewhat, the money flow started to increase dramatically. It went from deeper money flow to shallow, and then it went higher and higher. And it just kept going up sharper and sharper. But what to notice is not only that, but it stayed in a bullish sentiment. And this is where it gets really interesting. It kept staying above this money flow, and it was, up and down as the money flow was increasing, and it just kept going up. And then it was kind of like another gear of money flow. And you have the Bollinger Bands up here, way up here in the overbought area, and then had a dip and it came down a little, and it's still above the 50. It's still bullish. And gradually the money flow is coming down, preparing, saying, it's been up for a while. It's going to want to come down soon. Not yet, maybe. It's probably bullish on a higher time frame is what's going on. But this can help you, because like, let's say it went bullish, and like even right here it would have been, wow, that was a nice little move. It just got above resistance, and you're like, wow, how can I get in? And of course your bullish shark fins can be entries. But when it gets really bullish in some cases, it's riskier, but that it is bullish. You can take entries on these crosses from the FastMA and the slow-MA. I wouldn't recommend doing that as much unless you check everything and you're just getting a late entry. Maybe you're going to check, like enter on opposing levels on another time frame, say like a 5-minute, which is kind of a riskier one, but you're getting a lot more green candles here, and you could have like, okay, it's bullish, it's above the 200, the 200 is curved up, the money flow is just increasing, just exponentially. It's just really coming up, even the money flow going up to the overbought. And so, you have your little opposing levels here. If price gets above this top of this candle here, you could enter here. It gets above this one, you can enter here. Above this one, you can enter here. Above that one, it even had a dip. You could enter here, and then it came back down, and risky, but you could have got in when it got above this again, and right there's another entry. So you can, when you see this bullishness or bearishness, you can trade these opposing candles. And you want to use more confluence, and when the price is just taking off and pushing far away from the 200, that it's in a position of strength or weakness, depending on how far it is. But at the same time, the longer period of time that price is away from it, the more likely it's going to come back down to it, because that 200 is just going to keep curving up until price starts to go sideways a little bit, and the 200 is going to catch up with it, and then price is going to eventually dip below the 200 as it levels out some and curves back down. So you have this idea of like how the price moves, how these things affect it, how you can take some entries that are late, where you wouldn't want to enter, and why. When you start to see these patterns, like right here, it was choppiness. But like, even though like oftentimes it's choppy and below the 50, it'll go down. You had the 200 curving upward very gradually. And then like right around here, before it really pumped, it finally got above. And you're like, wow, okay, this is it. It revealed it because the price was sideways right here. What's that doing that? Oh, it's this magnet. As the price was sideways through here, you had the money flow coming up dramatically, and that's key. It was climbing, even the RSI was like climbing up, and it's like, okay, I'm going to get above the 2. This is a sign that you're going to have a big move, and it works on all time frames. And you wouldn't want to really enter it until it started getting above the 50, which it did here, like right around here, and then it got above the 200. I'm sure if you had Trend X or Indicator X or something else on, there would be some things that was revealed. In this case, Trend X wasn't, but here's your Indicator X, and you will often see this Indicator X lines becoming support, and then price coming up from it. It's risky to enter long, when you're starting to see bearish shark fins. But when you see confirmations like with the 200 that it's bullish and headed up, sometimes, especially after it's came down, not in this case, you can see their strength, and you can use the opposing candle levels. But with all this being said, you could have said, well, maybe I want to short it. It went up and we got bearish shark fins. But there's another thing here. I'll look at another asset to try to I'll look at something else, just something random. I'll just click one pith. I don't even trade this. I have it on here. And just kind of look at something and show you an example. That one's not happening yet. It hasn't. Here we go. Here's a good example. Really good one. All right, so let's say you had a bullish shark fin here, and you entered here right when this was closing, say right here, it closed it. But instead of the price going up to the value line, it went down again. But sometimes what I'll do, and I think this is very effective, it works great, is after a shark fin. I don't always enter on shark fins. I used to, but I'll enter more so on the crossover after the shark fin. Of course, I'm looking at the higher time frame too for my bias, but I'll see my shark fin. I'm like, there's a shark fin, and it might pop above, but I'm going to wait, and I'm going to enter here, even on a low time frame, even on a 5 minute or something right there. So I'll miss this first candle, maybe even the second. Generally depends, but that candle right there, or this one, let's say this one, that candle confirmed the crossover into bullish sentiment after this push down. And then you could have entered there, up here. And then, you could have a move here or further. And the same thing, it'll go like this over and over. And this here was kind of anomaly with Bitcoin that caused that. But you can see this over and over. Here's a really good example. You've got a shark fin here. If you would have entered it, you would have lost money. It was a below the value line. It was a good shark fin, valid super shark fin, but the FastMA did not confirm a cross of the middle band. You had another shark fin, closed, didn't cross. Another one, nothing. But what you did have after these shark fins is you had the crossover, and you entered. If you entered right there, you would have been good. You wouldn't have had the drawdown. You could have used high leverage. You could have taken money really quick. It didn't even make it up to the value line, but you wouldn't have been in the red as if you entered on this shark fin, and it would just kept going down for liquidity. So that's another tip. And this is I wanted to make a whole video for this in itself, but the crossover from the FastMA after the shark fins is better in many cases. Not always. Sometimes you'll get shark fins and they will be the entry and they'll be so choice. But prices on lower time frames, you're not always going to get that move, that real reversal or retracement off of a shark fin. But if you get it on the crossover, because you've seen this pattern, it's like, well, The FastMA is pretty deep. It's down here in the oversold, and it's deep. And when it's deep like that, it's more likely to dump with big candles downward to take you out. And that's really the main thing of this video, to not just see these patterns of where the FastMA is in comparison to the 50 line on the scale of TDIX, but to know, which shark fin do you take? Do you take the shark fin? Not always. Like, I'll try to find a bearish one. Let's try a different time frame. Maybe in an uptrend. That can often be, yeah, here's something. It's kind of, you'll see this more, when you're looking around, but you'll see these like bearish shark fins, and you didn't have a full crossover for a while. That's actually not even a good example, but it's basically the same thing that I showed before, just in the bearish scenario. Here we go. Here's a good one, decent one. This case, it pushed into a divergence anyway, but you had a shark fin here, but you didn't really have a move down, and then it went back up against you. But this time it got below the middle band, and then it still went sideways, and then you had this divergence, then it went. But you will see this. I guess this one's really good on a peak. Yeah, this might be okay too. I'm just kind of looking at this on the fly. In that case, the shark fin was a good entry. But if you back test, you'll start to see it. Here it is. Here's a really good one actually. Your bearish shark fin is here, but the price kept going up, and then you finally had the crossover here. So you want to take the crossover after the shark fin. Here's your shark fin way back here. The price went up quite a little bit before it crossed. So that's the point of this video, is to show you how easy it is if you're just trading these. But you will have your choppiness, but you can negate that choppiness, that I guess diluted signals and false signals. You can delete it, I'm sorry, negate it, and just kind of ignore it when you start to see these patterns. So like once you start seeing these choppy patterns below the 50, like you're going to want to wait till it looks like it's really ready to get above the 50 again. Like if you were going long here, all this here is just chop. Like if you got in and your stop got hit, just wait a while, don't get back in, because it's so below that it really started to go up here, and it even had support on this value line. But that's when it got above the 50. It had the shark fin, and then right when this is another good example I wanted to bring up too. You'll see this so often. You have a shark fin, like an entry, but it'll come back, go up, and then come back down. And as the price comes down close to the original part where the shark fin was, you'll have a rejection of the sentiment trying to turn bearish. It'll say no more bearish sentiment chop. It bounces right there. And that's how you know it's turning bullish right there. And so like right here could have been an entry too. So it's that retap of this sometimes. So these are things with TDIX that can really help you to watch out for. Or let's say you already took the trade. Let's say you tried to short or something. Well, like, okay, it bounced on that middle band. It didn't go below. Better get out. Or, the same if you're going long, like you were in a long or something, and then it went under the middle band, and then it rejected right here, and it couldn't get back above. It was headed down. You'll reveal more with moving averages and your key levels and your trend X. But that's some of the stuff you can watch out for, and it's really easy once you know. I understand that market structure is like king in trading and volume is king, but indicators have their place, and TDIX is a very excellent indicator once you understand this, because the RSI is kind of, with TDIX, it's kind of confined within the Bollinger Bands, whereas like a regular RSI indicator would be up and down, and it wouldn't really tell you much as the price is actually trending and the RSI is just going up and down. It does if you really know how to read it, but because TDIX's RSI is confined, except for the sharkfins, it's confined within the Bollinger Bands. It gives you even more data. It's like you're riding a bicycle and you went in the second gear, or third gear, or fourth gear, 10th gear if you got a 10 speed or something. And you start to see the trend even on lower time frames. When you start looking at the position of the Bollinger Bands, did they go up pretty high? Well, they may be on their way down. So it went up here pretty high, and then it's kind of traveling down. It went here, and it went pretty low, even went lower. And you had a big divergence right here. So this kind of validates, how good money flow divergences could be. If you looked at a different time frame, I'm sure there'd be a money flow divergence right here. Let's look at 30 or something. Was that the spot? Maybe not. There was on the 15. But what you did have is some sideways action. And then you had the money flow coming up dramatically. Actually, this might be interesting for me when I get off of here after this video. So that's it. That's the main thing. There's actually more to say about this. But, you can look at your 200. You can look at your 800 SMA. You can get a lot of data, a lot of data to kind of show you what's going on. I know it's kind of messy right here, but when you start looking at it and seeing the patterns and things, it's amazing what you can do with trading, and especially with TDIX. I love this indicator. I don't trade without it. I understand, SMCX. I'm still studying it just because I want to get better with it, and I understand market structure. I understand the key levels, but for whatever reason, I just prefer to use TDIX. It just, I like it. When I see it, I see patterns that I can't always put into words. It was so hard for me to really make this particular video because there's so much to say, and you have to do it with a video to show like what you're trying to explain. And it took me like at least three tries to record this and then to get it right, to say the things in a way, in an order which would make sense. So you understand, the movement of the oscillator from oversold to overbought, and how the different lines move faster. And, there were other things that I didn't say that I would say often, like in other videos or in my area of the Discord community where I post. You'll start to see things like when the price is, the RSI, like right here, it's right around the 60 on the scale, and right as it goes above the 60, you get a big candle. And oftentimes when it starts going below, like lower RSI, you get bigger candles down. So it's different on different time frames and stuff and different assets, but this whole TDIX RSI scale is so important. It really is the strength index in a way with this FastMA. And it's just amazing. I don't know how they did this to make the RSI stay within the Bollinger Bands, because it just gives you not only the RSI data, but then the position of the general movement of price, and how they made it to where these money flow divergences appear, right? Reversals, without even having to look at key levels, because you will see that so much that you'll see these money flow divergences just building up and pushing into higher time frames and happening at key levels, and then just price explodes. So yeah, I hope this video helped you to look at TDIX and not neglect it, and to see things in it that you might not have seen before that might be able to help you. Because it's easy to just want to like say, oh, I'm looking at the charts and I'm just scanning around and there's TDX down there, but you're not paying attention to it all the time. I didn't always pay attention to everything, but now it's like I got to slow down and look at it in detail. I'm like, oh, it's choppy here while it's below the 50. It might come down a little more, and it did. Like right through here, it came down more. And it was when it came down more that you probably had a divergence or something. Yep, a very slight divergence from here. No, that's actually, yeah, that is a divergence. So this was lower than this, and this was lower. So you had a bullish divergence right there. And it's so obvious, like, and then you had your higher low. And that's always like a confirmation that it's reversed. So yeah, with that being said, I hope you have a great day today.